Bitcoin by far has the most amount of capital. Bitcoin is by far the most secure network. More than that, the amount of hash power that's there. Bitcoin mining industry is one of the most mature things about the crypto industry. They're publicly traded companies that are Bitcoin miners. And this hash rate has been growing. There's like, a decade plus of data of how much this hash rate has been growing. And people don't reuse that, right? So this is the thing that Stacks is trying to do.
Welcome to Total Value Unlocked, everyone. This is a brand new podcast from Hivemind Capital, where we explore the technology and ideas shaping the future of internet and money, and how we're unlocking their potentials. I'm Matt Zhang. I'm the founder and managing partner at Hivemind Capital. And at this season, we're going to be focusing on the backbone of Web3, which is blockchain protocols. Before we start, as a reminder, none of these discussions should be taken as investment or financial advice. Please refer to our website for more information or contact Hivemind directly for any list of investments. Today, we'd like to kick off with Stacks, the leading Bitcoin layer 2, enabling fast, cheap transfers of Bitcoin and making BTC programmable in layer 2 smart contract. Our guest today is Muneeb Ali, co-founder of Stacks and CEO of Trust Machines. Muneeb and I now know each other for many years, and Hivemind has been lucky enough to have been the supporter and investor in Stacks ecosystem since our inception. For many reasons, I'm very extremely delighted to have Muneeb as our Genesis podcast guest. Muneeb, welcome. Thank you for joining us today. Do you want to take a moment to introduce yourself?
Thank you. Thank you so much. Thanks for having me. And especially the timing of the podcast is pretty interesting as well, because we've been working on this Stacks Nakamoto upgrade for a while. And the final binary software for it just came out yesterday. So I think we can celebrate a little on the podcast and dive in deep on different topics. But thanks for having me. I think a quick background about me. I'm an engineer. I'm a computer scientist. I did my PhD at Princeton. And when I was almost finishing my thesis, I discovered Bitcoin in 2013. I think given my background in distributed systems, I just found the peer-to-peer network really, really fascinating. Drove in a lot, tried building on Bitcoin L1 directly. This is pre-Ethereum. Ethereum didn't exist back then. And I think learned a lot of lessons about scalability and programmability of Bitcoin. And that led to Stacks in late 2017 when we started the Stacks as a Bitcoin L2. I think we were early in the idea of Bitcoin L2s. I think a lot of people didn't fully understand what L2s and Bitcoin would mean. But I think over the last couple of years, we've done a lot of educational work and helped create the category of Bitcoin L2s. And now it's becoming a real category out in the industry where a lot of capital and developers are coming in. And that's very exciting to see, because I see L2s as almost critical to the growth of Bitcoin. I don't think Bitcoin is going to reach 1 billion people on the L1. I think it's going to have to be through L2s. And I think we are very excited to be doing some of that groundbreaking.
Hold that thought, because we're going to have a lot to unpack there, and I'd love to, circle back to this. Actually, I think it's a great segue to start our conversation today, Muneeb, because I want to start, by talking about and touching base on something which is, a basic but ever debated topic, which is, comparing, contrasting the Bitcoin ecosystem and the Ethereum ecosystem, right? I'm sure our audience will be delighted to hear your take, which you already sort of alluded to earlier, the fundamental difference between BTC and ETH themselves, also the current landscape, and the layer 2 on both BTC and the Ethereum side. And finally, really getting your take on the general monolithic versus the modular approach of building a blockchain protocols in general. So to start with, we'd love to get your take on what you think the fundamental difference between the largest two, crypto asset today.
Yeah, so I think this is a very interesting debate, and people get into it a lot. Especially, I think there was a time when Ethereum was showing a lot of momentum, and it was I think there was almost like a meme going around that the flipping is going to happen, which means Ethereum is going to take over Bitcoin. And I was on the opposite side of that debate, right? Like I think people fundamentally misunderstand that Bitcoin and Ethereum are actually operating in two different categories, and they're very, very different categories. So if you look at Bitcoin, it is a technology that is designed for a single application, right? Whereas Ethereum is completely different. It is designed as a general purpose computing platform. So by definition, Ethereum is designed as a technology platform on which many different applications can run. And I think that it sort of like puts them in different categories because they happen to be like the number one and number two asset. I think people often sort of like compare and contrast them, but I think they're sort of like almost designed to operate in two different categories. So Bitcoin is designed as money. Everything in Bitcoin is optimized for that one use case. Right? So Bitcoin is designed to be decentralized, it's designed to be basically durable and not change. That is not Ethereum, right? Like those were not the design goals of Ethereum. So for example, for Bitcoin, it's actually very, very important that anyone can run a node. Even if you have a normal laptop with okay connectivity to the internet, you should be able to run your own node. And people should be able to have a sense of durability with Bitcoin, like the 21 million supply, the core consensus, the core sort of like proof of work algorithm. Nothing has really changed that much. In fact, like when I started in the industry in 2013, I can actually take a Bitcoin software, like dust it off and run it like a 2013 version, and it will still catch up to current Bitcoin chain tip and still work. And now you apply the same thing to Ethereum, and all these models break down, right? Like Ethereum is no longer even using the same consensus mechanism. Forget about a client from like 2017 or something. That client would look completely, or node would look completely different from what Ethereum is today. And predicting into the future, it's very hard to tell 5 years from now what Ethereum is going to be, right? Like the economic policy changes, the different incentive mechanisms, different technology. Like
Not to mention the founder of Ethereum has still been very active, where at this stage, at least, Bitcoin is a completely centralized, with the founder even be able to hard to find, right? So
right,
to add
right.
on top of that.
So and I think that has to do with the genesis of Bitcoin as well. That if there's no funding, no marketing department, no sort of like founder, everything's grassroots, and the community is
Then
very
you can argue
organic.
everybody's your marketing department to some
Yeah,
degree,
yeah,
but you have no
exactly.
centralized one.
Yeah. So I think that's like some of the core fundamental differences. So BTC as money is actually a much more established concept. A lot of the community around Bitcoin uses Bitcoin as almost like a savings technology, right? Like gold. Like they're just like people buy gold bars. This is how the grassroots movement is. Whereas Ethereum, people look at it as a technology platform. If I'm a developer, I want to come there. I want to build my applications. When I hold ETH, I use it mostly for paying gas fees for my stable coins or other applications. Whereas my Bitcoin is sort of like my savings. So those assets are two different things. And I think Ethereum is the only project that tried being money, like explicitly. There were memes about ultrasound money, and they were trying to change the monetary policy to try and basically make Ethereum more scarce and compete with Bitcoin. But I don't think the way to compete with Bitcoin is that approach. The way to compete with Bitcoin would be create a extremely simple network that is maybe even more durable than Bitcoin, that
Right.
and try to have a very, very wide distribution of the asset, no large concentration of the asset, right? That's a very, very different type of a network. That's not Ethereum, right?
Right. And I
So
think
that
this is a good segue to go into something else I want to touch base with you, because you're basically saying despite they're the largest two, their starting points of what they meant to do was always very, very drastically different. You always in the last few years having people in Bitcoin ecosystem trying to find ways to unlocking the asset by giving it the programmability side of features, like stacks, and who is the leader in that. On the other side, you also have a lot of outcry in the Ethereum community and trying to move it to a store of value, whether that's even possible or not, right? So which has actually become a very, very interesting debate. So your point is that because they started very, very differently, I guess that's why the current landscape of the ecosystem are very, very different. Probably they just designed to build different type of stuff, and that's probably coming back to why layer 2 and the scaling solution of the two is very different. I would love to get your take on how that's actually translating to the community and go to market and building side of the ecosystem.
Yeah, I think that's a great question. So I do think that given the different base layer, it's sort of like their path to becoming sort of like the default or the largest used network on the planet looks different, right? So for Bitcoin, because it lacks programmability by design, right? It lacks scalability in certain ways. There needs to be a lot of development in L2s on top of Bitcoin to be able to sort of like counter some of those things, right? So the mental model here is like, do you start with money and then build a active economy on top of it as layers? Or do you start off as the application platform, build a lot of applications and L2s, and because of the usage of those apps, you try to become money, right? So if you talk to a lot of Ethereum people, they would say that, hey, because a lot of NFT trading happens in ETH, because a lot of DeFi deployed capital is ETH is actually on its way to becoming money. On the Bitcoin side, it's the reverse, right? The app economy is actually less developed, but the asset itself is much more mature, much more better distributed, has a lot more institutional demand. And the bet here is that if you have money first, then developers will come and build the applications on top of it as layers, which is the work that we're doing as Stacks, the largest L2 over here. So those paths look very different, right? And the reason why I'm betting on this path is because I've seen this in computer science many times before. The simple base layers that are very durable tend to win. Like those architectures tend to win versus complex base layers. And there are many reasons for it. There are many examples. Like, for example, think of this way. Think of the internet. It started with TCP/IP. You can't even imagine changing TCP/IP today, right? Like it would cause like havoc on the rest of the internet if the underlying TCP/IP layer starts to change. So I think Bitcoin is a little bit like that, right? Like it's extremely stable, it's extremely durable. People can trust that it's not going to change, and then you're building something on top. Whereas there were other networks in the past before TCP/IP and the internet took off that were very complicated. They had a lot of intelligence built into the network itself, but they didn't grow that much. And I think there are many reasons for these things, but at least historically, from a pure computer systems perspective, simple base layers like Unix, TCP/IP, these are the kind of things that get adopted a lot.
That's a great analogy. And, obviously you and me have been talking about this concept for years, but, for our audience to really understand about, sort of why you choose this path to scale the ecosystem is, obviously very, very, very useful, very, very helpful. And do you think, because of that fundamental difference of Bitcoin, more a store of money, store of value of money, and Ethereum was born as a software layer, and the way they scale the ecosystem means the application eventually going to be built on top of them going to be different, or you think it's just different way to scale, but eventually the same applications could be built on both?
Yeah, so I think I think for the user, they can get the same experience. We're talking about the underlying architecture, that what's the underlying architecture looks like. And I think those architectures are going to look different. This is, again, one example is that back in the 80s, there were two different types of microprocessors, right? There's RISC, the reduced instruction set architecture, and CISC, which is the complex instruction set. Both are CPUs, right? Like for the user, it kind of like they can get the computations done on the reduced instruction set, which is Bitcoin, right? Like you can only do a few sort of like, operations very, very fast. And then the rest of the more complex stuff is built on top of it. Right? So there are many analogies in computer systems for simple stuff, because you can always build more complex things on top of simple things, right? Like that's the case. And that's also a decentralization argument, that you can actually build more, maybe less decentralized things on top of a very decentralized thing. But Ethereum will always be limited by the properties of the base layer, right? Like the base layer is very complex. it's hard to build simple things on top of complicated things.
And your point is, to summarize, like the front end, what user eventually build on the app side shouldn't be affected by the design of blockchain itself. The path to choose this way is because building on Bitcoin based on its, a large money and store of value is the better, secure, and durable way to build that backend technologies to enable the people without having to have any negative impact on the user experience and other aspects of it.
Yes. So I think imagine that Stacks, let's say, is a more experimental layer on top of Bitcoin, and it has different trust assumptions, slightly different trust assumptions from Bitcoin. So if a user wants to, use Stacks as a hot wallet and take a little bit more risk and deploy capital there, they always have the option of going to the base layer, which is dead simple, and move their capital to cold storage. And I think a lot of users would do that. Whereas on Ethereum, if you're already in an environment that's more experimental, there's no exit, right? Like you can't take and go and there's no cold storage like Bitcoin where you can take your capital and go to a layer that's not experimental, that is really, really tried and tested, and your money is safe there, right? So that's sort of like the analogy. Then I think there's something to be said about focus and having a clear path to what you're trying to do. And I'll give an example. Now let's take Solana. I think Solana is different from Ethereum in many ways because it never tried being money. And that way you actually see less sort of like in Ethereum and Bitcoin communities, there's a lot of rivalry as well. Like, Bitcoin community members will attack things on Ethereum, and Ethereum community members do the same here. But I think with Solana, it's a sort of like, it's in its own lane. It's not trying to compete with Bitcoin. It has never tried competing with Bitcoin. It has never said that, hey, we are trying to actually be a sound money or anything like that. They picked a lane, and they're pretty much said, we're going to build the best, fastest, cheapest developer platform, sort of like early Ethereum in a way.
I want to double click on this because you just brought up a bigger topic is, despite Bitcoin and Ethereum is different in a lot of different ways, the way to scale them in the layer 2 side is both using a modular type of approach. Whereas Solana is saying is like, I have the programmability, but I'm also going to use a monolithic way to sort of scale because the performance on the layer 1 is actually good enough. It's have what both Bitcoin and ETH doesn't have, and we're going to go down that path. So there's going to be big debate about this type of approach, right? In the VC space, in the builder space. I mean, what's your view there? Is there any chance for the other chains apart from BTC and ETH to have that monolithic approach and competing with the modular approach? And if you think that's going to happen or not, why?
So I think it's interesting. In some ways, the Bitcoin and Ethereum approach is similar, but it's different in one way as well. So basically, Ethereum is completely embracing the modular approach, right? Like they tried doing sharding in the past that didn't work, and they completely scraped it. And now everything is about rollups and L2s. So there are going to be tons of L2s and this sort of like, modular approach. Whereas I think Bitcoin's modular approach, right? Yes, there are many L2s that are being developed, but I think it's not clear yet that Bitcoin is going for modular approach because the first level of indirection has to happen for Bitcoin, right? Like there's no other option. Base layer is so simple that you have to build at least one other good layer to be able to do interesting things with Bitcoin. But I don't think it's clear yet that how many L2s are going to be there. Is there going to be one really large one, right? Because if you think about liquidity and integrations, like from a UX perspective, it's actually a simpler experience if most of the traffic is on one big L2, right? And we're seeing this in Ethereum in some ways as well. Like recently, Base is doing a lot of traffic and a lot of users are going there. So there is
Without even a token.
Yeah, without even a token, right? So there is some tendency for a couple of winners to emerge, which actually happens in tech a lot. So we'll see what happens. But Solana is taking a different approach, and in some ways it's working, like it's actually growing faster. And then obviously there are questions about scalability and future over there. And then but they're at least, I think one thing I like is like what they're trying to do is very clear. If you talk to like Raj or Toli, they would say, we're trying to build a system that can operate as close to the limits of physics as possible. And if you look at their current performance, the internet ping times could be around 300 milliseconds, and they're doing 400 milliseconds of confirmation time. They're actually pretty close to the limits of physics already, but the question is, can they keep doing it when a lot more users are coming and a lot more scale is needed over there?
Yeah. Now, well, we laid out the landscape. It's very, very helpful. I want to bring it back to Stack, right? So how does Stack fit into that Bitcoin layer 2 ecosystem? How does your approach address some of the opportunities and challenges that's in the ecosystem? So can you share with the audience a bit of your original story, vision, how Stack has started it, and the mission behind it?
So I think going back to when I was finishing my thesis and sort of like dabbled into startups and discovered Bitcoin, I do think like some of these fundamental choices that you're still seeing play out, they were playing out even back then, right? Like so when we were thinking about building on Bitcoin, the question was, should we build on Namecoin, which is most people wouldn't know what it is. It was actually the first altcoin, right? So it deserves a place in history. And it was started in 2011. It was the first altcoin. And it was a fork of Bitcoin code, but it actually shared compute power with Bitcoin through merge mining, right? So some security benefits from Bitcoin. So options were, should you build on something like that? Call it even like an early L2, right? And Satoshi himself contributed some ideas, maybe even code to it. So there's a very like sort of like beautiful history behind these ideas. And I directly worked on Namecoin, actually caused some of its demise as well when we discovered some problems. So there's a very interesting history behind stacks and the early days of Bitcoin. So that's one option, like sort of like, hey, build on an L2, even if it's not called an L2, and or start a new system, which is what Vitalik did, right? Like you can start a completely new network, new token, new economy. And I think if you look at it historically, people started basically pushing for new ecosystems a lot versus building around Bitcoin. And then with Ethereum, that concept came back again. Like, should I start a Solana or an Avalanche, or should I start like an L2 on Ethereum and try to benefit from Ethereum? So we're seeing this trend, right? Like we're seeing people always ask this question, should I go and create a separate island, which means you have to do a lot of work. You have to do all those integrations, you have to kickstart an economy, and maybe some of those don't survive. And we've started seeing the demise of some of these sort of like isolated islands, right? Like projects that started and they have a long half-life, so I think they stick around for a couple of years. But we've started seeing some big names. I won't name them right now, but you can just look them up. Projects that were bigger, but now they're sort of becoming completely irrelevant, and market caps are going down significantly. And they are sort of like, it's hard to imagine that they're going to make a comeback, right? Whereas in ETH L2s, you're seeing, still a lot of competition, but again, a few of them are going to get more usage. So there's some consolidation that's starting to appear, but they're all betting on Ethereum, right? So I think there's if you look at Bitcoin, Bitcoin by far has the most amount of capital. Bitcoin is by far the most secure network. And the level of development, of course, has started with stacks and others, but it's still relatively small. And I think my argument is, so I've always been in the camp of like, hey, why go create something from scratch when you can sort of like stand on the shoulder of giants, right? So Bitcoin already has $1 trillion in capital. And this is the math that people who build ETH2s do. They're like, hey, Ethereum already has users, already has a lot of capital. Why don't I try to build an L2 over there? But I think those arguments are even stronger for Bitcoin. Yes, the dev tooling might not be as good, but it's more than $1 trillion in capital. And more than that, the amount of hash power that's there. Bitcoin mining industry is one of the most mature things about the crypto industry. They're publicly traded companies that are Bitcoin miners. And this hash rate has been growing. There's like, a decade plus of data of how much this hash rate has been growing. And people don't reuse that, right? So this is the thing that Stacks is trying to do. So it's the first system that as Nakamoto goes live, the transactions on the L2 will be secured by 100% of Bitcoin hash power. So we're tapping into this massive resource which is the Bitcoin hash power and Bitcoin security. So instead of starting a small island that is not very secure, we're actually standing on the shoulders of giants, both in terms of the capital, but also in terms of security. And I think if this works, I wouldn't be surprised if more and more people start doing that, and you see even less capital and less developers going to alt L1s, and more attention coming to Bitcoin L2s.
Got it. And I think that's definitely an interesting take, right? And I think it make a lot of sense, which actually leading my question is like, I would love to do a deeper dive on the technical side of this, right? Because a lot of this rely on how you actually will link with the mothership, right? There's a lot of untapped capital, you know, that would argue that 1 trillion is more than weighted to some degree than the lack of programmabilities for you to be worthwhile staying on Bitcoin and trying to do that, than trying to find something else which have the programmabilities and actually doesn't really have that $1 trillion sitting there for you to sort of unlock. You already have a gigantic first mover advantage and a head start. So let's zoom in on some of these technical aspects, right? Stack use obviously proof of transfer, you know, POX to settle transactions to Bitcoins, as well as its own native token, STX, to power the network. You know, talk us through, Muneeb, like your rationale setting it up like this, you know, the tokenomics behind STX, you know, point of, you know, transfers, like its role in leveraging Bitcoin securities.
So I think on the Bitcoin side, I would say that one of the sort of like one of the things that historically happened is that in the Bitcoin culture, having other tokens sort of like became like something that they would look down upon, right? Because and I think there's no reason to do that, right? Because Bitcoin is a special asset, like it's sound money, it's digital gold, and unless something is trying to compete with it, right? Which, as I said earlier, that if someone was trying to compete with Bitcoin, the marketing would be like, hey, here's another sound money asset, and it should be a very simple network. It should, you know, have a wide distribution. It should try to match the properties of Bitcoin and try to improve on it somehow, right? Like that would be competition. But if you're starting something completely different, which is not money, which is, you know, it's in its own lane and it may be even helping Bitcoin. Like I think that's how I look at Stacks. That Stacks actually helps Bitcoin. It actually helps Bitcoin in many ways, and I'll dive deeper into it. So in Bitcoin, one thing I noticed was that there was a lot of work that was happening with technologies which were going out of their way to avoid using tokens. I think Lightning is one example. There's also Liquid is an old project in the Bitcoin space, and they would rather have a federation, which is like you trust, you know, a handful of companies, than have a token and an open network. And that was sort of like puzzling to me, because it to me seems like you're making suboptimal decentralization choices or suboptimal engineering choices just to avoid the use of a token. And that didn't make any sense. And that actually made Stacks a bit unique, right? Like, because our team we are Bitcoiners, like we believe in Bitcoin, but we are also very pragmatic, right? Like we are not like fundamentalists in that way that, hey, we're not going to use a token, or we are going to wait for some perfect technology to come and so on. I think we are very, very sort of like pragmatic, very practical, where we're like, let's assume Bitcoin is never going to change. We have this powerful tool. Tokens are mostly for incentives, right? Like you need to incentivize someone to do something. And this extra layer of L2 infrastructure, someone needs to run it. Someone needs to be incentivized to run it in an open, decentralized way. And I think that's what STX is. That's what Stacks is. It's incentives for miners and validators, and even the people who are doing the transfers between L1 and L2 of BTC, because Bitcoin doesn't have the programmability to do it in a completely trustless way right now. So you incentivize a large group of decentralized players to come in and do that work for you. And I think that actually separates Stacks a lot from some of the other projects. I'll give an example of Lightning. Lightning is a great project. I'm a big supporter from the beginning, but Lightning has a lot of technical challenges. Like, for example, because it doesn't have a blockchain, because it doesn't have incentives, it doesn't have a token, there are no sort of like miners in Lightning, right? So that means that if I want to do a $5 million transfer, there needs to be liquidity on every hop of the channel because there's no blockchain. And that has been a challenge for a very long time. Like even if you see the recent Coinbase integration of Lightning, like they can do like $10,000 transfers. Like what if I want to do $1 million transfer? Like uh, large DeFi players wouldn't take a technology like that seriously because their capital requirements are very, very different. Like people wouldn't think twice about before moving $100 million on Ethereum or Solana. Like this is just not a thing, right? Like you give me the address, I'll have a small fee attached, and the transfer is just going to go through, right? So you have to meet the market where it is and design technologies that are state of the art. And that turned out to be a unique thing in Bitcoin because people were just not doing it. It's not that developers weren't trying to build L2s around Bitcoin. All of them, like there's Fedimint, there's a lot of like these other solutions, they're all either federations, meaning they're in my mind dead on arrival because if the rest of the industry, including Solana, Avalanche, all these things, they're open, decentralized networks. You can argue how decentralized or not decentralized they are, but they're open and decentralized. You don't need permission and you don't have to talk to a federation to use it. Then some of those technologies were sort of like dead on arrival. Or there were things like state channels who have a lot of technical limitations. So I think that made stacks stand out in the early days. The next wave of L2s that are coming in now, I think they have sort of like broken away from that previous federations or Lightning like designs, and they're building more state-of-the-art systems like Stacks itself.
Yeah, and I think now a lot of this, as you say, become very apparent. But I remember back in the day when you and me talking about this a few years ago, Blockstack, now called Stacks, actually have to run through a lot of those challenges, making sure weighting some of this short-term gains and pains with the medium and long-term the belief, right? Because Lightning Network doesn't have a token means they don't have to go through a lot of the regulatories and other scrutinies. And remember, like you're very thoughtful thinking about how to launch a token, how to design a token, how to making sure navigating through a lot of the regulatory sort of like landscapes, and people talking about regulatory scape being very complicated today. Well, there's not even any 4 or 5 years ago, right? So I think that is kudos to you and the team to thinking about what that medium term should really look like, and design this, even that means that in the short term taking a lot of money, cost, and time, and putting them in place.
Yeah, I think you're right. I'll give you some examples of this, right? So I do think there is a cultural sort of like value in the Stacks ecosystem that comes from the original team, from myself, which is sort of like, let's do the right things, even if they're the hard things to do. Because then it's like, short-term pain, but long-term, these things tend to work out. And there's several examples of it. You mentioned the token side. So when we decided that, hey, a token is actually necessary to grow an L2 because it needs to be open, it needs to be decentralized, people need to be incentivized, then we looked into the legal structure. And so it was the first project that got the SEC qualified offering done in the US because we wanted the token distribution to be open and fair, right? Like be legal. Anyone in the US, even if you are not an accredited investor, you could participate. We wanted our community members to be able to participate in it, have a very wide distribution. A lot of people don't know this, but when the Stacks token offering happened, around 4,000 companies or funds or individuals participated, which at that time was by far the largest token distribution event. And it happened in 2017 in terms of how many people were able to participate because it was open, it was qualified by the SEC. And then, we did a ton of work on decentralization to actually, before launching the mainnet, we introduced a full legal framework through Wilson Sonsini, a top firm in the US, and actually decentralize the ecosystem. It is a very decentralized ecosystem, and that goes with the ethos of Bitcoin. It comes with certain challenges, again, short-term pain, right? Like how do we coordinate between so many different developers and entities, and everyone is going in different directions. So that's the short-term pain. But the long-term gain is that you have a real decentralized ecosystem as an L2 on top of Bitcoin. Same thing with the token, that in short term, a lot of my colleagues, like my Bitcoin friends, they hated the fact that we started a token. Like imagine I would be on the list of top Bitcoiners and top Bitcoiners to follow, and now all of these people hate you, right? And they're fighting you publicly. And again, it's a short-term pain. And I would very patiently explain to them that, hey, what we're doing is actually good for Bitcoin, and try to like win their hearts and mind. But for years, they kept sort of like hating. And now everything's turning around because
Yeah.
what we
Hopefully you
did,
convert a lot of them along the way last few years.
yeah, we've converted a lot of them. The Bitcoin dev community is growing. A lot of them came around in the end, and they were like, "Hey, you were right. Actually, getting more developers is a good thing. Being open to all sorts of solutions is a good thing. These things are good for Bitcoin." So I think again, short-term pain, long-term advantage. Same with our programming language. Like it is decidable. It's more precise. Developers do complain that, hey, there's a learning curve, I have to go over it. And we're doing certain things like looking
Yep.
into Rust like interfaces to make developers' life easier. But that short-term pain is actually going to help because
Right.
the contracts deployed on the largest Bitcoin L2 are going to have less attack surface area, which is a big thing, right? Like
100%.
it helps a lot in the long term.
100%. And actually, this is building onto that, right? You've been working on an incredible large upgrade project to Stacks recently, the Nakamoto upgrade. An activation window, is gonna happen in a couple weeks time, and and what do you feel about such a large upgrade was necessary? Like, what's the most significant difference of the network performance wise before, after the upgrade? And what have you learned throughout the process?
I think it's a great question. So one of the things that led to this upgrade was lessons learned from developers and users with the first version. So the first version went live in early 2021,
Right.
and I think coming from the Bitcoin community, like this, it's hard to see your own blind spots, right? And it's only kind of like in the rear view mirror you can actually see things more clearly.
Just about
So
life general too.
yeah, exactly. So I think one of the things was that coming from the Bitcoin community, we were very focused on decentralization and Bitcoin security. So it's like, hey, just like a Bitcoin node can run on a Raspberry Pi, a Stacks node should also be able to run on a Raspberry Pi. Or we want to hash all the data in Bitcoin because that's how validation and the algorithm is working. We really want to be close to Bitcoin security. But that meant that our L2 is producing a block every 10 to 40 minutes when a Bitcoin block is coming, right? And being Bitcoiners, being used to that sort of speed, I think we didn't fully saw the pain points that the users were seeing when they're now used to much faster systems, right? Like Ethereum and Solana will give users a very different UX experience. And I think similarly, it's not just UX, even if you have to wait for the blocks, it's the total network capacity as well. If Stacks nodes are running on Raspberry Pis, they can't take a lot of network traffic. They can't, so our mempools will get full very quickly. A lot of people wanted to use Stacks and they're like, hey, the mempool is full, you can't really use it. So I think a lot of those lessons went into the Nakamoto design. And a fundamental shift was that the designers and the core developers became okay with the fact that you don't have to be as decentralized as Bitcoin. Anyone who wants to go to the mothership, they can just withdraw their asset and take it back to Bitcoin. It's okay if the Stacks node needs to be a little more powerful. I'm not talking that, hey, it needs to be like you need a data center to run it, but you might need a little more powerful computer to run it compared to Bitcoin, and that's okay. But what's more important is I think we want to have more network capacity. We want to have much faster blocks. And I think cracking that algorithm on much faster blocks that actually benefit from 100% of Bitcoin finality was a big breakthrough. Think of it this way, that ever since Namecoin happened, when Satoshi himself was involved, this is 2011, and we are in 2024 right now, so almost 13-year process. People have been trying to crack this problem. Like, can we take Bitcoin hash power and secure something else with it? We've seen merge mining, we have seen some other techniques. Even our earlier approach of the first version of Stacks was an attempt at it, but we never had 100% Bitcoin security. And I think this is the first time that without getting any consent from the miners, Bitcoin miners have no say in this, right? We are not going to them and say, hey, you need a patch, you need a software upgrade, you need to opt in to something, nothing. Bitcoin miners actually can't help and stop it, right? We will have 100% of the Bitcoin hash power securing transactions. And to reverse a transaction on the L2, you'll have to go and attack Bitcoin L1, which I think is a huge breakthrough, which is probably people don't fully understand it yet. Because when we're going and talking to app developers or stablecoin issuers, like this is a property that really appeals to them. Like, do you want to issue a stable coin on a small network? Like I was talking about these small isolated island versus you want to issue your stable coin in a fully programmable environment where as soon as a Bitcoin block comes, now the stable coin transfer is secured by 100% of Bitcoin hash power. And I think that's a huge property to have. So these are the things that are going live with Nakamoto. And the initial transaction times, we expect them to be like 5 seconds or somewhere in that order. But the bigger thing that we have achieved is that now we have decoupled the L2 speed from the L1 speed. And we don't need hard forks or consensus changes to keep improving it. So when new versions of the Stacks node software, they get shipped, and there's, let's say, performance improvement in the networking stack or somewhere else, it might keep becoming faster. So there's a path now to making Stacks, fast like Solana, like over next upgrades, while it retains Bitcoin security and Bitcoin capital. So this
Right.
is as if Toli was building Solana on top of Bitcoin and was like, I want to use Bitcoin capital and I want to build a really fast, really
Oh, I
scalable.
remember that analogy next time when I talk to him. All right, so okay, technical side, perfect. I get it. Amazing story, and good luck to the upgrade. We're all rooting here for you. And but switching gear on the community side, right? A vibrant ecosystem is essential for any protocol. And now Nakamoto Upgrade is being activated. How are you thinking about community building? Is it like build and they will come type of approach, or you're gonna be actively getting out there, engaging with the new developers, users, pitching sort of the technical superiorities, and what's the most effective way between the two anyway?
Yeah. So I think historically, one thing I'm very proud of in the ecosystem is that because of decentralization, because we never had large treasuries, we weren't throwing money at the problem. We have seen this again. I won't name the ecosystems, but some ecosystem would throw a lot of money at developers and partnerships, and as soon as those incentives run out, like everybody just leaves. And I think that's not the case with Stacks. Even in the last bear market, there were certain developers, because they were organic and they were mission driven and they believe in Bitcoin. I know of stories where people couldn't even pay themselves salaries, right?
Right.
And they still kept building through the bear market. And now their startups are getting funded, right? So in the last like 6, 7 months or so, so many startups in the Stacks ecosystem got their initial, $2, $3 million funding round done from top investors. I know you've invested in a bunch of them, and that's a great sign because
Right.
an organic community is very, very hard to replicate, especially in this industry, and people who are in it for the long term. Another thing that now I think some people call Stacks like a blue chip project at this point, especially a blue chip L2, because we've been around. We've seen 2 bear markets at this point, and we've always come out stronger, and we've kept building and shipping code and real production systems. So I think those things are great. I'm super excited about once SBTC is live, which is our Bitcoin asset. I think the way the ecosystem is thinking about growth is that we're going to do a lot of Bitcoin hackathons, which are open to other projects, open to Lightning, open to sort of like other L2s,
Mhm.
but we want to ship the best product.
I was about to
I've-
actually ask you, like you talk about hackathons, like what is in your way you measure success? Like what type of KPI do you use? Like hackathons you run, events you run, the wallets you getting activated on the chain, volume being done. Like how do you thinking about the success of the ecosystem?
yeah. So I think there are, again, many entities in the ecosystem, but one thing, like I personally believe in, like, I think 2 things are the most important personally. One is I always view developer traction as a leading indicator of success in any ecosystem. This is what we are seeing in like Base and some of the other things. If developers are going somewhere and they're excited, then that means that exciting things are happening in that
Right.
ecosystem. So I'll personally be watching a lot of the developer traction
Yep.
metrics. Especially, I'm personally very excited about this Rust approach because it really differentiates from EVM. Even like there are a lot of Bitcoin L2s launching, most of them are EVM clones, right? So even in the Bitcoin L2 space, it differentiates, but it attracts a very, very interesting community. Like the Rust dev community, I've spent some time in it. It's one of the highest quality developers, senior developers, people who really know what they're doing. They get attracted to this language, and I think they're going to like the security changes that we would be making to make Rust sort of like run on Clarity. Wasm, which is a project like after Nakamoto, I think a lot of focus would be there. Right now, obviously, people are focused on Nakamoto, but the ideal dev environment that I envision is like imagine a hackathon like 6 months from now, where transactions are fast and cheap on the L2. This is the most secure Bitcoin asset because we have 20 plus institutions as signers already. There's $1 billion of capital sort of like locked backing this, which is again the largest. And I think so. SBTC is considered like the most secure, most liquid asset, and developers can program it in a Rust-like environment. I think that's ideal, right? Like that's where the magic happens, where developers are excited. The roadblocks are removed, right? Like the network is no longer slow, the network capacity is higher, programming languages are easier to work with, and the asset is available everywhere. It's the most liquid asset. It trades on every exchange, and they can easily get access to SBDC and start programming it. And I think that's where a lot of the magic would happen, and that's what we are sort of like driving towards. Some of these are tech upgrades. Some of this will require like community work, and we have really good events, sort of like teams in the foundation and some of the non-US entities in the ecosystem. And I think they would be driving a lot of sort of like flying the orange flag, flying the Bitcoin flag, let everyone come in. And I'm actually even really interested in, I've recently had some discussions with developers who have worked with Lightning. And again, Lightning is great. Maybe Lightning finds use cases in like micro transactions or some sort of like other things happening. But that I encourage them to then try out SBTC as well, right? And when they use it, they're like, oh, I don't have to deal with channels. I don't have to worry about liquidity, and this is fast and cheap. So
considering they're already in the Bitcoin ecosystem, it's going to be easier to convert too, right? They just want to be able to build on this and whatever give them the best user experience to do so. I want to zoom out a little, like, how does Stacks interacting with other protocols within the larger Web3 ecosystem? You mentioned Rust, you mentioned Solana, you mentioned Ethereum layer 2, you mentioned other layer 2 solutions within the Bitcoin ecosystem with token, without token. The symbiotic like relationship between Stacks and Bitcoin, the relationship and collaborations with other Bitcoin layer 2s, and scaling solution providers. You can be seen as a competitor, you can be seen as the leader. Potential collaborations even outside of Bitcoin ecosystem with Solana, with Ethereum, and other blockchains. Like, how do you sort of like see that Stack's position in that wider Web3 industry?
I do think that I would personally focus more on some of the upcoming ecosystems. Some of the upcoming ecosystems, especially that have more advanced technology stacks, because they are a better fit for our dev community versus EVM-based systems. I think like we are Ethereum, for example, already has Bitcoin assets. Like WBTC is like 10 billion in circulation. There's TBTC there, and I think with the recent takeover of WBTC with Justin Sun, there's an opportunity for other types of Bitcoin assets to sort of like gain some traction there as well. But if I have to pick between that or an upcoming ecosystem like a Solana or an Aptos or the Ton network, the Telegram one, I do think I would personally just look more there because it's more about where are the next generation developers going, right? And I think some of those ecosystems seem to be growing faster, and they have more need of a Bitcoin asset than WBTC is mostly on Ethereum, right? So that's just my personal view. Like that's how I would try to look at it. In terms of the Bitcoin L2 landscape, I do think the bigger division is going to be between EVM L2s and non-EVM ones. And I think Stacks is already a leading one, and we are being very explicit about, we're not EVM. And I think you're basically picking the type of developer you're attracting. So Solidity developers, there are certain developer persona, the people who get attracted there. And I think if you're going after Rust, if you're going after more senior, more sophisticated people who really know what they're doing, I think that's a different developer demographic. And I'm not saying the EVM chains are not going to have traction. I think, but they will compete with each other for a certain demographic of developers, and we're just standing out as different.
Yeah, and when you do approaching this other, new ecosystems and other protocols, what's your attitude towards sometimes you can really encounter some very tribal, sometimes even hostile type of attitudes or mentalities, right? Like talking about your own personal experience happened early this year in East Denver, and again, very unfortunate and sorry about that. But how do you see that tension, and and turning them into opportunities.
Yeah, I think even the ETH Denver thing, a lot of Ethereum people came and they were nice about it and they were apologetic and so on. So I do think like some bad apples can leave a bad taste. But in general, what I'm noticing is that a lot of these newer ecosystems, they're actually very supportive of Bitcoin, right? Because they see Bitcoin, like Ethereum is the only project that genuinely tried competing with Bitcoin. A lot of these other projects have never tried, never thought of it. They don't see it as competition. They see it as an asset. Like almost imagine like a stable coin, right? If you go to an Avalanche and you're a stablecoin issuer and you want to issue your stablecoin there, they would welcome you because that means more liquidity is coming in, another player is coming in, more devs will come in, and so they welcome it a lot. And I think issuing SBTC, the programmable Bitcoin asset, is actually more similar to issuing a stablecoin on these chains because they would welcome you. They want more liquidity, they want more capital to come in, they want developers to come in being able to do these things, and that's the initial reaction we're getting, and which is great, which is great. I think we are in this unique moment in time where there's an opportunity. I personally believe that just like stable coins have crossed like 100 billion in circulation, I
Yeah.
think these programmable L2 BTC assets will also cross like 100 billion in circulation in the coming year. So it's a huge opportunity for establishing like a large asset class, the SBTC as the programmable Bitcoin asset, and have it, deployed and available on as many venues as possible, and getting developers access to it wherever they want to build. Obviously, I think our focus is going to be building directly on top of Bitcoin in the Stacks L2. But if people want to take it elsewhere, we want to make it as easy as possible for them to do it.
Yeah. And in line with our podcast, title and theme of total value unlocked, I want to ask you like your thoughts or your longer horizon vision is, how do you think the work you're contributing in Stacks gonna, sort of unlocking the full potential of Bitcoin as sound money, as a store of value in the broader ecosystem?
Yeah. So I think this is sort of like what I mentioned earlier in the podcast, that Bitcoin needs to reach more than 1 billion people, and then eventually billions of people, right? But let's pick 1 billion as a target, because 100 million just doesn't seem like a big enough target, right? So if Bitcoin is going to reach 1 billion people, then you start thinking about what type of infrastructure is needed. And I think that's really the goal of Stacks L2 right now,
Right.
because we know that on the L1, 1 billion people can't even own a UTXO, right? They can't directly own Bitcoin. And I don't think many people know this, right? Like, so if you are a Bitcoiner and you want Bitcoin to be used by more than 1 billion people, then L2s are the only path forward. Like, there's no other path. Like, L2s are the only path forward. So if you support Lightning, you should be supporting Stacks and other L2s as well, because this is like, Bitcoin is sort of like a highway, and it's like jam-packed and there's a lot of traffic there. The L2s are the bigger highways you're building around it so that traffic can spill over and people can actually start using it. And it benefits Bitcoin, right? The more users use Bitcoin, they own it. It's like, if ETFs is a great analogy, right? Like, a lot of Bitcoiners support it because more people are coming in and they're owning Bitcoin in a different sort of like a tool, a different vehicle.
Yeah.
L2s are similar. If a lot of users own Bitcoin in an L2, they actually they're more sovereign than through an ETF. They can withdraw it to the L1 whenever they want. They can deploy it. They can make Bitcoin a productive asset, and you can earn yields on it.
Yeah.
So I think it's a very, very healthy thing for Bitcoin. And then the way the Stacks is designed, like, this is another thing that I don't think a lot of people are fully aware of, that STX holders, so Stacks is the token that incentivizes the L2 infrastructure. So the validators who are running the fast consensus before a Bitcoin block comes, or the people who are helping the transfer of BTC from the L2 back to the L1, right? So it's just incentives for infrastructure providers. It doesn't compete with Bitcoin at all. And those incentives come out as Bitcoin rewards. And people who are earning this Bitcoin, it's actually a very, very beloved sort of like a feature, and people are very sticky who participate in as validators and signers. And to put some numbers on it, something like $250 million in Bitcoin is going to go out as rewards over the next 12 months at the current market rate. That's a lot of incentive, right? And people can earn Bitcoin. And here's the most interesting part. as the network starts to grow more and there's more and more usage, let's say people are pegging in a lot of Bitcoin, they're moving it around, even if they're taking it to other places, you're paying gas fees on the Stacks network.
Right.
And these gas fees actually go as incentives. They translate into more incentives for the STX holders, right? So the bet you're making, if someone is like, hey, well, why are you interested in Stacks? Well, it's the largest L2 already, and we haven't even started getting real traction on any of the L2s, right? So if there's real traffic, real momentum, a lot of users, like, millions of users, tens of millions of users are actually using it. The gas fees are economically designed to increase the Bitcoin rewards that the STX holders are getting.
Yeah.
So it's already at like 6-7%, but it might be more depending on how much gas fees are being consumed on the network.
Yeah, and we touched base on this topic the other day. As the ETF getting bigger, as institutional investors holding more and more Bitcoins, the ETF is going to be a large vehicle of a lot of idle capital. They're actually not yielding anything, right? So at some point, obviously, we have to see the regulatory side of the clarity, but how to actually making and mobilizing those capitals now sitting in some of the ETF vehicles versus hundreds, of billions at some point is going to be a very interesting opportunities for stacks and other Bitcoin builders to sort of solve.
Absolutely, and this is very natural. Like, one of the things we have is, as I went through Y Combinator earlier, so they have this mantra that, write code and talk to users, and that's sort of like a value in the ecosystem. When we say write code, we really focus on building and shipping, right? Like there we have a reputation now that we actually ship stuff and build production system and don't just talk, but then talk to users, right? And then
Right.
over here, there are two types of users. One user is the developers, like what are the developers saying? What tools do they need? What type of network upgrades do they want?
Right.
But the other side is Bitcoin holders. And there's so many Bitcoin holders who are looking for deploying some percent of their Bitcoin and earning some rewards on it, or not paying taxes and even locking BTC and just getting some stablecoin liquidity, right? So a lot of Bitcoiners, they don't want to sell their Bitcoin. They don't want to do risky things with their Bitcoin. But if something is very sort of like decentralized, open, very close to Bitcoin, and they can get some liquidity or they can get some yield, like that is something that they are interested in.
Yeah. Muneeb, like this is a great conversation. We're actually at the top of the hour. We're gonna end our episode with bold predictions. So you're the first one. So we're gonna start with you. What is the boldest prediction you think for the Bitcoin ecosystem and the stacks, say in the next 5 years? What's that one thing gonna happen that you think is beyond everybody's imagination?
Yeah, I think I'm a big Bitcoin believer. I have a lot of my savings in Bitcoin. I think in the next 5 years, I mean, some people are predicting Bitcoin is going to go to 1 million. I can see it going to anywhere between 300K to 500K
Wow. Okay.
in that time frame. But I'm personally more interested in the number of users, right? Like depending on how you count it, I don't think we're really at 100 million because there might be addresses, but it might be same people reusing addresses and so on. So I would want to see Bitcoin sort of like cross like a 200, 300 million users market cap, because that's like you're now becoming internet scale, right? And in terms of stacks, I think there's a real opportunity for stacks to actually be the L2 where most of these users discover Bitcoin. I don't think
Period.
they're gonna.
L2 period, not
Yeah.
just L2 for Bitcoin.
Yeah, it's effectively like there is a I would say a significant possibility that when a normal average person is doing a Bitcoin payment on the internet, let's say on a website, they're actually using the Stacks L2 in the background because it's faster, it's cheaper, it's programmable, it's easier to deploy than the L1. And the L1 is more of a settlement layer and
Mhm.
cold storage. So when you have large amounts of Bitcoin and you want to transfer that to your cold storage, that's where you take it.
Right. Amazing, Muneeb. Thank you for joining us today. We had a very, very productive and very, very interesting conversation. Um, Tell the listeners where they can find you next.
Yeah, I think I'm pretty active on Twitter. My handle is @Muneeb, which is my first name, Muneeb. And for information on Stacks, you can go to stacks.co. That's .co.
Awesome. Great. Well, thank you very much for joining us today, Muneeb, and I'm sure I'll see you very soon. And thanks for everybody tuning in today.
Awesome. Thanks a
Bye
lot.
bye.